Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
It's a really great time to have Brent in and give us some good views of where he sees market optionality moving, because we have basically been in a very wide sideways swath of volatility for a few weeks now. And I think that's going to continue until we can compress down. But after some wild ride lower since our last webinar, actually, Brent, in January, where we were at 6,100, and I said, but we just need to break this and roll over, and there are a whole bunch of levels to hit on the way down. We did go and tag this 48.78 that I had, and we have basically been bouncing around that 52.50. We had some headlines come in yesterday, which absolutely gave a little bounce to the dollar, to bonds, pulled back the yen, and definitely spiked equities. And it's a combination of peace headlines with Trump all of a sudden playing nice in the sandbox with Powell, which is very structurally powerful for confidence. And our market is all about capital flows and confidence. So now that we've also had some war vibes, kind of de-escalation as it relates to Putin and Trump also picking a date to kind of talk. And then, of course, Bessent is out, Treasury Secretary Bessent, doing his economic speech, and more discussion around potential de-escalation on the China trade war front. Now, I've got lots of opinions about all of that, but the point is, it definitely helped to bid up bonds, soften that gold parabola, and put a bid in equities. So that I'm going to throw it over to both you and Hans, our partner in crime over here, Hans Albrecht. He's our options mentor extraordinaire in our LaDuc Slack member workspace. So, and he is just into your tools as well. So we all have lots of familiarity with them. But what we really want to hear is your kind of market views, also your new tools that you've just launched in early April, which is more aggregate dealer positioning. Love that one. Hit it. Tell us what you're looking at and what you're sharing for market direction next.
Thank you, Samantha, and thank you all for having me here. I really appreciate it. And just to jump right in, you did indeed. I remember that conversation vividly about those market highs in January. So kudos to you. The last couple of months have been interesting because most of what we talk about at SpotGamma is historically the idea of dealer gamma buy strike, and where does that sort of bring support and resistance and invoke volatility of the markets. And when you get into these situations where vol is breaking out and there's potential credit market issues and there's this real macro flows abound, that gamma buy strike paradigm goes away, and you really have to look at volatility and options prices as kind of the source of truth. And to give an example of that, there's all these headlines, like you said, we've had these wide ranges, and there's headlines and there's conjecture and rhetoric, and there's very little to actually grab onto. And there's so many different dynamics, as you know now, that it can be hard to assess what the impact is, right? Because kind of what you mentioned, that there's the news and there's the reaction to the news, and the reaction is oftentimes the truth, is the market is the voting mechanism. So we've been really focused on looking at implied volatility from that perspective. And just to give you an idea, the market today was up, well, at the high is 2.5%, 3%. And if you looked at the change in volatility, like S&P vol, it did not budge at all. And so if you figure that, hey, a China trade deal is coming, Bessent is talking this down, or there's war situation, whatever your belief is, if the market was sniffing that out and believing that was true and real, you would think that traders would anticipate less volatility in the future, right? And we didn't see that at all. And so you have the situation now where the market's extremely illiquid. There are still gamma flows in terms of negative gamma, which means that if there's short covering, then there's still dealer flows that have to chase the market in either direction. So that exacerbates volatility. And so I think what happens in these situations, you get a 2% rally on a headline, you go, this is the dip that we've been waiting for. The bottom is in, like, here we go. And when you watch vol doesn't budge. And that is your signal that what has just happened is just a reflexive flow and not actually an adjustment to kind of risk expectations, if that makes sense. And that watching those vols has really been able to help us navigate, I think, things a little much cleaner fashion, because it's very easy to get emotional here. It's very easy to kind of like chase things in this environment. And also it's hard to figure out what's real and what's not real. And so
that's a good way of putting it.
Yeah. Watching, watching that vol has been very helpful. And I think, you're piecing together those macro pieces so neatly. And I think I kind of like dumb it down a lot by just saying, like, just tell me what implied vol is doing and I'll try to like guess from there.
So you're laser focused on the volatility volatility. So is Hans, and can interpret that best for our clients as well. I am focused on, when you talked about the extreme illiquid markets, I look at when buyers step in, when they step away. And so that's basically underpinning whatever market direction call that I make. So they really started to step in. It only started December 2nd. They really started to step away and sell on February 19th, before the Friday, the 21st, where we had the big drop, and before December 18th, 3% drawdown. So I started to see selling underneath the surface. Now we're to a point where really they're afraid to step in. So we have a lot of work to kind of repair, and capital flows. I have that mantra, right? Money goes home. They really have started this exodus at the beginning of the year, and it's only been pulled forward, where we have risk of this tariff war and recession risk, and everything's been pulled forward very, very aggressively. So there really hasn't been certainty. And one of the reasons why gold has done so well is because it loves an uncertain backdrop. But your point about illiquid markets is really core. We need capital flows and we need confidence. And right now we still do not have either, even though they're coming out on a regular basis, oh my goodness, daily, trying to placate, and not just the volatility is elevated, but the yields are elevated. So both of those things are part and parcel for any tailwind moving higher, is for volatility to kind of create a lower regime below that 30 and stay below 30. And Hans and I have talked about this every single Wednesday. It's a new regime, not just political regime, right, monetary regime, but also volatility regime. So yes, in your tools, when do you see volatility dropping and staying below 30? Because every bull wants to know.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here, and subscribe to LaDucTrading YouTube channel for more content.